Hi there. In today's video, we'll talk about the difference between market orders and limit orders. And this video is part of our course on fundamentals of trade. So let's see today's outline. We will begin with basic definitions. So we will explain what a market order is and what a limit order is and draw the distinctions between them. Then we will delve deeper and talk about market orders more specifically and explain how they embody price uncertainty. And later we will talk about limit orders in the final part of the video today. And in relation to that, we will talk about execution uncertainty. There are thumbnails in the video description, so if you would like to jump ahead to a particular part, please feel free to do so. But for us, we will get started with the first item on the agenda today, which are the basic definitions. So what is a market order? Essentially, a market order is an order to purchase a security or sell a security immediately, right? So without delay and at the prevailing market price. So that's why it's called a market order. And the person, the trader who is submitting this order is essentially demanding liquidity, right? So he or she is wishing to trade without delay at a good price, right? At a reasonable price. So this is demanding liquidity, right? Liquidity is all about the ease of trading, the speed, the quality of the price, right? So these are the different sort of aspects of liquidity, and placing a market order is actually demanding liquidity from the market, right? Whereas a limit order is quite different. So it is an order placed by a trader in a conditional way, essentially. Excuse me. So it means that a limit order will be executed if the security reaches a certain price. So until a limit order is executed, it actually rests in the order book, right? And of course, this can be a buy order or a sell order, right? And traders who submit limit orders are actually supplying liquidity to the market. Okay? And I'll try to elaborate what I mean by that. So to understand these concepts a bit better, let's look at the chart on the right-hand side. So let's say this is the order book, a representation of the order book for a particular security, say for a stock, right? So we have bid prices and ask prices. If you are unfamiliar with these concepts, that we have a separate video on that. In fact, the previous video on this series. Essentially, ask orders means, so these are limit ask orders, okay? And these are limit bid orders. So these are the prices that traders are willing to sell the stock at certain quantities. So for example, there are 50 shares available at this price. There's another additional 50 shares available at this price, and then there's additional 50 shares available at this price. Okay, so this is sort of the sell side of the market. And this is sort of the buy side, bid prices. So these are the limit buy orders, right? Again, submitted by traders. So let's say there's 75 shares bid at 397, another 25 at 396, and another 50 at 395, right? So these are all limit orders. So they are waiting in the order book to be executed, right? Maybe we can make an analogy like this. So think of a supermarket, right? In a supermarket, you have different products, and typically a supermarket you would like to go has, lots of choice at good prices, right? So here you have just one product, one share being offered at different prices, right? Again, a good order book will contain lots of limit orders. So that's sort of the choice aspect of it, right? And it would provide depth, right? So these are essentially people coming together willing to trade a particular security. So the deeper the order book is, the better for the traders. And how about a market order in this case? So if if a person submits a market order, essentially they are trying to trade in this area. Okay, so this is sort of known as the top of the book. So this is the best bid price available. This is the best ask price available. So a market order, a person submitting a market order is hoping to trade in this area. But as we will see in a second, they may not be able to do that. All right. Again, liquidity related factors will have an impact on that. But the bottom line is essentially limit orders are sort of orders that will be executed conditional on price reaching a certain level, right? So if this order here will be executed if the price goes down to 396, this will be executed if the price goes down to 395 and so on. So these are providing liquidity to the market, right? So this is the offering in your supermarket, the choice, right? Whereas a market order will come and will demand liquidity from this area and will take away liquidity. So this is in reality quite dynamic. So lots of limit orders will be added, removed. Market orders will be coming time to time, and this will keep moving. So don't think of this. So this is just a snapshot of something that is very dynamic. All right. Okay, so let's try to now delve deeper and try to understand what we mean by price uncertainty in the context of a market order. At first sight, there shouldn't be any price uncertainty because, we are trying to get the price at the top of the book. But in reality, it doesn't work like that. So there's a trade-off here. The key advantage of a market order is that it enables fast execution. Okay? But it entails some price uncertainty as well. It doesn't have to be a lot. So it doesn't mean that the trader doesn't have a clue about the price, but it means that the trader may not get the price that he or she sees on the screen, right? So we've seen those the top of the book best bid and best ask prices. So the trader may not necessarily get them. And there are two factors that are involved here. First of all, between the time a market order is submitted and the time it's executed, those prices can change, right? Especially if we talk about stock markets and so on, the prices, the top of the book will be moving continuously, right? So by the time, and there will be lots of orders being submitted all the time, right? So by the time your order is executed, your market order is executed, the price might have changed a bit from the price that you have seen at the point of submission, right? The change doesn't have to be a lot, right? But there is still some uncertainty. So that's one aspect of it. The second aspect of price uncertainty applies to large investors. So if you're a retail investor who's trying to trade small quantities, you don't really need to worry about the price impact. You're essentially a price taker. But if you're an institutional investor and if you want to trade a large quantity of a particular stock, you will worry about the price impact. And that relates to the depth of the order book, which is an aspect of liquidity, right? So if you remember the graph that I showed you earlier, there was a certain quantity traded at the top of the book. If your order is larger than that, it means that only part of your order can be filled at those prices. And the larger the order you submit, the more you will move away from that price. And that relates again to the depth of the book. So if the book is deep enough, which means it has liquidity, then the price impact will be small. But if you are trading large quantities in an illiquid market, then price impact is a real concern for market orders. And in reality, what institutional investors do when they try to trade large quantities, even in liquid stock markets, they will break up their trade into smaller chunks, and they will execute them sequentially over time to reduce that price impact. Okay, and they would also try to hide their intentions especially if they are trading on the basis of information. Okay, now we are coming to the last part of our video today. Oops, sorry, went too fast. Let's see if I can go back. Okay, it's not allowing me to go back, But essentially, the last item on the agenda is limit orders and execution uncertainty. So we talk about market orders and price uncertainty. In the final part, let's talk about the trade-off in the context of limit orders. So the trade-off with market orders is that you get fast execution, but there is some price uncertainty. With limit orders, you can get a better price, right? So that's the advantage, but the disadvantage is that there is execution uncertainty. Okay, so what do we mean by that? So for example, let's say the current bid price for a stock is $10, right? So if you want to sell the stock, right, this is the price you will get, let's say at the market price. But suppose you want to get a better price and you feel that if you can wait a bit, the price of the stock will increase and you will be able to sell your shares at $11 instead of 10, which is what you want. So you want the market bid price to move from 10 to 11. And you feel that if you wait a bit, this will happen. So what you can do in that case is that you can submit a limit order with a price of $11. And then you are supplying liquidity to the market, right? But what you don't know is that when this order will be executed. You hope that it will be soon, which may be the case, especially, if you submit a price close to the current bid price. For example, if you submitted a price like $18, clearly you would have to wait a lot longer before this can be executed compared to the $11, right? So this has a lot more execution uncertainty. But even in this case, there will be some execution uncertainty. So you expect this order will be, let's say, executed soon, definitely sooner than this, but still you don't know exactly when. And the other problem is the market might start moving in the other direction. So instead of going this way, maybe the price starts going down. Then as you can see, your limit order is moving away from the current price, which just fell down to 9. Right? Now it has become less likely that this order will be executed. It may go back up to 11, and eventually your order might get filled, right? But there's always this uncertainty, right? So this is the downside of the limit orders. They give you an opportunity to trade at a better price, but there's a risk that your order may never be executed, or there's uncertainty over how long it will take for your order to be executed. Okay, everyone, I think that's all I wanted to cover in this video regarding market and limit orders. Hope you have found the video useful, and I look forward to seeing you guys in another video. Thank you so much.